So welcome back to Noobs. This is the first episode back since vacation. So we took like around about a month break or so. We did one episode while we were on vacation, but I don't think it's been posted yet. So we'll have to get that up, and then um, we're gonna get back into the normal grind of things. It's Friday. So far, the account's pretty flat overall, sitting at just about 46K, and it's an up day. Probably not a ton of adjustments to make today. The first one that I notice here is I would probably adjust the Russell. You see how you got a nice solid up day in the Russell here today. And this has been one that I've been rolling it as this Russell has been rallying, and now it's finally getting a pullback day after a couple strong days. So that's really good for you because you were leaning short in there just because of how much this thing has rallied. So now I would buy the guts and sell the wings. We've done this before. You remember how to do that?
Truthfully, no.
Okay. When I say buy the guts and sell the wings, we're sitting at a straddle, right? So we're short a straddle in here. We're short the 2700 call and the 2700 put. So we're going to buy that back and widen our risk back out. Yeah. So then go down to like the 2600. No, we can keep the same expiration.
Okay.
We're just basically taking some profits here and reducing risk. So I go down to like yeah, that's probably fine. The 26. No. Stop. You sold the 26 straddle. We're selling a strangle. We're buying the guts and selling the wings. So we're going to be selling like the 27.75 or the 28 call. No,
Why?
the put. Leave the put.
Oh.
leave leave the put at the 2600 like you had it, and the call at the 2800. We're selling a strangle. We're buying back the straddle and selling a strangle. Out of the money is a strangle. There you go. That's correct. So you're going to pay a $70 credit to do that. I don't think you can increment it in 0.5s. So you're going to have to tick it to tick it up to 70 point, or yeah, do 70.4. That's fine. It's all over the place. Just try it for 70.4. See if you get filled. You can always adjust it. Why did that not even get put in? No, go to, you see where it says more?
More? What do you mean more? On here?
No, down at the bottom right where it says more.
Yeah.
Go to messages. Rejected fixed incorrect price. It was rejected. Okay. Something to do with the price. Go ahead and put it. Is that the same one? No, that's silver, dude.
Oh. Why?
Go back to it. I don't know why it was rejected, but you're gonna have to re-put it in.
That's not right. Hold up. Okay.
Buy the straddle, sell the strangle. There you go. Now hit next. Try it for 7. Yeah, try that. Go. What the heck?
It's not letting you do it.
Okay, just do one leg at a time. One side at a time. So, yeah. No, that's selling. There you go. Yep, try that. There you go.
No.
Nope. That one more time, but keep it. What the heck?
I'm very confused.
Next. Okay. Yes.
Mm-mm.
What in the world? Why is this not working? All right. We'll have to message them, I guess. Really weird. All right. What else we got going on here that needs adjusted? Archer. I don't think I would. Yeah, I just got a notification saying illegal price. Weird. Archer, no. Angel Studios, no. Uh, Weeble. What do you have in Weeble? Your calls are all the way out to. You got one out in May, and then you've got one in February, and one in March. That's fine. I would leave them. CVX, this one is Chevron. It's working fine. Hymns. Also working all right. Bitcoin up small today. That one's been a good winner for you. You're up like $500 on the year in Bitcoin already. MP, you finally made back all your money in MP. I don't think we touched that one either. I really don't think, really, the only thing I would be adjusting here today is probably your, the Russell, but we can't. NVIDIA is working nicely as another winner.
Yo, Benny.
What's up, BP? We're doing the podcast here real quick.
Oh.
It's all good. I don't think you do really anything. I say we go to silver and we'll put on a calendar spread in silver just so we can have a trade for the day. Not the futures, SLV. Those futures are too big. That was like the worst trade that your account has had so far. I think you lost like $2,000, $2,500 in silver. Not good. All right. So go to the April, the 84 days out in time expiration. Then you're going to buy an in the money call. So go to, hang on, in the money, not out of the money. So like maybe the 80. Yeah. Do the 80 call and then go to a near dated expiration. What's maybe today's a Friday, so go 2 weeks out in time. And then sell the at the money and see what you can get for the at the money. What does that give you? $5 at the money? That's 91. So you bought the 80. That's $12 for $11 wide. 2 weeks out in time. No, go just out of the money a little bit to the 93. There you go. $13 for $13 wide. There you go.
Okay. See if it lets us put it on.
The equities are working fine. It's just the future. So what we did there, do you understand what we did? Open it up. So you got long a contract that has 84 days. You bought the option to buy silver, this ETF, for the next 84 days at a price of 80. It's currently trading at 91. Okay. So you're $11 in the money with that contract. And then you sold 2 weeks out in time. You basically kind of made like a covered call, like you bought the shares and then sold a call against it. But instead of buying the shares, you bought a 3-month contract and sold a call against the 3-month contract. Okay. So instead of having to put up $9,000 to buy 100 shares, you did it for $1,700. That contract replaced the shares. So it only costs you 17 minus the $4.70 that you collected for selling that contract 2 weeks out. So really it only costs you like 12 or 1300 bucks to get exposure in a $9,000, what would be a $9,000 product if you just bought stock. So that's the power of leverage and options. So this is called a diagonal spread because it's a calendarized spread, meaning two different expirations are going on at the same time, and it's calendarized over a period of time. But because they don't have the same strike, it's not a calendar spread. If you have offsetting, or if you have different strikes and they don't share the same strike, so if we would have went in there and bought the 80 and sold the 80, then it would be a calendar. Or if we bought the 90 and sold the 90, it would be a calendar. But because we put one in the money and one out of the money, it's referred to as a diagonal spread. So a diagonal is a calendarized spread with strikes that are not sharing the same strike. And a calendar is a calendarized spread that shares the same strike. So you buy and sell the same strike. So hopefully this is a bullish to neutral strategy. So what we want to see happen is either the stock go up or the stock stays around this price, and that $4.60 of extrinsic value in that 2-week contract, we want that to go to nothing. And then we want this April contract with 84 days at the end of that 2-week period to maintain a good chunk of its value. That would give you a profitability or a profit target range of somewhere around 2 to 3, maybe even 350 is potential in a trade like this in the next 2 weeks.
Okay.
Make sense?
Mm-hmm.
Any questions about anything else? Why don't you try that Russell one more time? Try to close that.
Should we do it for the same price?
Yeah. Yeah. Now it's working. Okay, so go cancel it and put in the actual Iron Condor. Oh, it says queued.
What do I mean?
It should say working, not queued.
Should I click cancel order?
You can try. It might not cancel.
Okay. I'm canceling.
Canceling, but it didn't cancel it.
Yeah.
They must be having issues routing. Really weird. Oh, did it? There, it's gone.
Okay.
Try it again. Now try to do all in one transaction. There you go. Yeah, that's fine.
Nope.
Kind of a weird.
Did not work.
Really weird. All right. Well, I'll keep trying throughout the day, and I might have to call them, and I'll get that widened out because we've already lost. It was up more, so the longer that we let this thing wait, it could potentially move against us. So this is really, really stupid, the fact that it's not working. But that's all I got for today, unless you had any other questions. So we only put on one trade. We tried to adjust the Russell, but we couldn't. The rest of your stuff is, honestly, it's not looking too bad. You're up about almost $1,000 on the day. You've got about another $1,000 to make back before you're sitting back in the green. Does anybody else have any questions in the chat before we wrap this up and move on? Bueller going once, going twice. All right. Well, thanks for watching, noobs. It's kind of a slow, boring episode today. I apologize. We had some technical difficulties, but don't forget to like and subscribe. And if you have any questions or have any particular stocks you want to have us take a look at trading, throw it in the comments. And like, subscribe, come hang out in the Discord with us, and we'll see you next time.
At the chart, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in their blank minds. Margins and leverage like mountains to climb. Spent the whole week on Delta and Greeks. Gamma theory ain't cutting through their peaks. Volatility shakes, but they don't feel the quake. Future contracts blur on this financial break. Can't you see the candles rise and fall? Risk and reward, it's a game of all or no. Options open, futures closed, eyes blind. Frustrated fathers dream in the stock grind. These waiting specs, faces blank as empty streets. Hedging positions, but the questions repeat. Time decay means nothing to the young souls. In this market play, it's like digging holes. Iron condor flies, but it never lands. They can't grasp the feel of these trade winds. Liquidity tide choking on the sand. Profits and losses, they'd rather go play bad.